What Bitcoin Did podcast.
Hello, how are you all? What a week last week was with the Mt. Gox shows. Thank you to everybody who helped with that. Thank you for all your feedback. It was a really busy week. Pretty much killed me, but it was really good to do. So welcome to the What Bitcoin Did podcast, brought to you by Kraken, the best place to buy, sell, and trade digital currencies. I'm your host, Peter McCormack, and today I've got an interview with the amazing Lily Liu, the co-founder of Earn.com. But before that, I've got a message from my show sponsors. So BlockFi, I'm off to see these guys next week, off to New York to catch up with them. Do you know them? Are you new to the show? You must be if you've not heard of them, because I've been talking about BlockFi for months. They are the leading crypto to USD lender. They service customers worldwide. They cover 47 US states, and their interest rates start as low as 4.5%. So if you want a crypto-backed loan, BlockFi accepts Bitcoin. They accept Ether. They accept Litecoin as collateral. You can be funded in USD or GUSD, which is Gemini's dollar-backed stablecoin. And if you go and make an application, you're going to be funded in as quickly as 30 minutes. They are awesome. Make sure you check them out. Head over to blockfi.com/whatbitcoindid. There you can get $25 in free crypto added to customer collateral loans under $10,000, or $50 in free crypto added to customer collateral loans over $10,000. And applying takes less than 2 minutes. So head over to blockfi.com/whatbitcoindid. That's blockfi.com/whatbitcoindid. And also, let's talk about Cash App again. Come on. Have you checked them out? Have you downloaded it? I have. I got it on my phone. It's so awesome. I used it for the first time this week, actually. Sent one of my friends $50. Had to try it out. God, it's so easy. It's like the easiest thing ever to send somebody money. So make sure you go and download it. They are the first traditional peer-to-peer payments app which supports Bitcoin, which is cool because you know me, I love Bitcoin. It comes with most of the features of a traditional bank account. You've got the ability to direct deposit your paycheck into the app. You get a physical, customizable debit card which you can link to spend from, and you can earn 10% cash back from places like Whole Foods with your cash boost. And that can be used in tandem with your Bitcoin balance. There is simply no app like the Cash App. Go and check it out. It's in the Apple Store. It's in the Google Play Store. Just search for Cash App, which is CASHAPP. And just to note, the Bitcoin buying is only available for US customers right now. Okay, I've got a few announcements. I'm going to be heading around the world over the next few weeks, crazy as that sounds. I'm heading off to New York on Sunday to catch up with the BlockFi team. I'm also going to be recording a couple of interviews while I'm in New York, and then heading off to Boston to the MIT Blockchain Expo again to record a couple of interviews. Then I'm going to be heading over to Hong Kong. I am emceeing the Token 2049 conference. If you're there, make sure you come and see me. Come and catch up with me. I'm then going to be heading back to the States. Got a bunch more interviews to do. So it's going to be pretty busy. So I'm going to be traveling. Make sure you come and say hello if I'm anywhere near you. Make sure you come and say hello if you're at any of those events. Also, and if you didn't see it, I have announced that April is going to be a banging month. I'm going to do a whole month about Lightning Network. A whole month of episodes, interviewing people about Lightning. So that's going to be pretty cool. Learning a bunch more myself. Okay, so listen on to my interview with Lily, and she's become my new favorite person in crypto. She was recommended to me by Meltem, and she doesn't disappoint. Her take on crypto and Bitcoin and why VCs love Ethereum and protocols is pretty amazing, actually. She managed to articulate something that I've been thinking about, but like trying to get into words and haven't been able to do it. And like she has a whole bunch of perspectives I haven't thought about before. And also she talks about Bitcoin Rationalism, another cool term I've not considered. So I hope you enjoy it. If you've got any questions about it, do reach out to me. My email address is hello@whatbitcoindid.com. And if you want to support the show, if you enjoy what I'm doing, head over to my website. Go to www.whatbitcoindid.com. Click on the support section. There's a whole bunch of things you can do. Even just leaving me a review on iTunes. That's super helpful. So check that out. Anyway, I'll let you get on to the interview. Like I say, you got any questions, feel free to reach out to me. My email address is hello@whatbitcoindid.com, and I pretty much reply to everyone. Hi there, Lily. How are you?
Doing well, Peter. How are you?
I'm pretty good, thank you. I've got a confession for you.
Okay.
I told you a lie.
And?
So, you know when we were meant to meet in San Francisco and do the interview?
Uh-huh.
Well, there was an 8-hour time difference with England, right?
Mm-hmm.
When we were meant to do the interview, Liverpool were playing Leicester City, Liverpool, my football team. And I didn't have the heart to say to you, I'm not coming because Liverpool are playing. So I made up a lie because there's nothing more important than to me than watching my football team.
Well, Peter, unfortunately, you didn't know me well enough because the lie that you made up was worse than just telling me you had to watch a soccer match, which I totally would have understood.
Well, I didn't know you. And karma's come to get me now, because at the point we did that interview, Liverpool were top of the league, 5 points clear. Last night, Manchester City went top, so I got what I deserved.
So tell me, how do you feel about the World Cup in 1984?
1984. Well, I was 6 years old. No, 1986.
No, the Hand of God moment.
That was Mexico 86.
Yes. Okay, that was 86 then.
Well, I mean, it was a goal. It was allowed, probably by one of the top 3 players of all time. And yes, I was. It wasn't my first proper World Cup. I mean, I look back on reflection. It's disappointing, but I was too young to care.
Interesting. That's very rational of you. Many Brits that I speak with who oftentimes weren't even alive during that moment, they get really emotional, worked up over this football cultural movement.
Do you know what I think it is? If you're an England fan, you are used to disappointment. We lose pretty much every major penalty shootout we go into. We have goals disallowed that should be allowed. So I'm used to disappointment, actually. And also being a Liverpool fan, we haven't won the title in 29 years. So this year we've got a chance. So yeah. Do you like our football?
Well, I love the World Cup every 4 years. I don't follow all that closely in between. But I will say, the golden lining of all of this for the British football fan, is that you got to go to the pub. You got to drink more.
We do get to go to the pub. Actually, do you know what? I'm getting into your football.
Oh, yeah. There was the Super Bowl, right?
Yeah.
Did you watch that?
Yeah, it was probably the worst football game I've ever seen. It was so boring. I'm Raider Nation, though. That's local, right? Raider Nation. Right. We should probably talk about blockchains and crypto.
Yeah, you want to talk about blockchain?
I think so. All right. So sometimes I do it, sometimes I don't, depending on how many interviews I've heard with them. I haven't heard one of your interviews, Lily, so I would love the backstory.
Backstory on Lily?
Backstory on Lily.
Well, good Chinese American girl from the Bay Area. I used to play the violin. Studied really hard. The only sport I did was one where, it was a very safe one. I was a swimmer. Grew up here, went to Stanford, studied East Asian studies. Always kind of had an interest in sort of why are some countries able to support themselves and rich, and why are others just really can't seem to get there. And actually what kind of inspired that interest from an early age was I was basically lazing around one summer when I was 9. And my grandparents lived with me. And so my grandfather had this book called Life and Death in Shanghai, which is basically one woman's autobiography of really hard times, what she went through during the Cultural Revolution. So I was 9. I ran out of other things to read. So I was reading that. And it was almost like this kind of sci-fi book to be reading, right? Because imagine you're living in Northern California, summertime, very comfortable. And there's the story of someone who just went through, just terror after terror. And I just didn't really understand, right? And then a few years later, I actually went to China in 1994, 1995. And that's when, Pudong in Shanghai was really nothing. They had one airport. Basically the entire city was being built. And it was just very bizarre to me as I sort of reflected on, within a 20-year period, it went from, neighbors, tattling on neighbors to this massive economic transformation. And that was just something that really sort of grabbed me in a very fundamental way to try to understand. And that really stayed with me for a long time. And that was part of the reason why, I could have studied sciences, whatever, in college. Instead, I studied political science, economics, international relations, because that was just something I really wanted to understand, right? How does one generation, and not just one generation, but really the same people, go from being a red guard to being, the head of this massive economic transformation? And that was that's still something that just really fascinates me. So that's, how I ended up studying what I studied. I studied at Harvard East Asian Studies, so similar theme. And then kind of got into the whole banking consulting world, coming out of college, kind of fell into it, worked at McKinsey, KKR. So some pretty, good institutions, learned a lot from them, moved back to China a couple of times, built a hospital, which was first sort of large scale private and foreign funded hospital in China, and then got into crypto. Got into crypto about 5 years ago. There's a bunch of news around this kind of like scammy thing called Bitcoin, and I thought this is either a massive scam or there's something really fundamentally interesting about it. So I read the white paper, and I thought this might be used for scammy things, but this is real, and that was about 5 years ago. So I kind of jumped into it and kind of stayed in it ever since then.
And so what was the bridge between learning about crypto and then working on earn.com?
So I actually got into crypto when I was in China. Bobby Lee, who is, founder CEO of BTC China, then BTCC, was just a personal friend of mine. He was the one who kind of introduced me to Bitcoin originally. I was in China at the time. I decided to move back to California. When I got back here, that was just one of the things I continued to be interested in. And 2015, there were a lot of people who were interested, but not that many people who were, actually working full time on something related to Bitcoin. And in those days, Bitcoin and blockchain were almost synonymous, right? So I knew some folks at Andreessen, kind of talked to them. They introduced me to a few of their portfolio companies. And there were really sort of two at the time. There was 21, which was this large scale, kind of somewhat secretive Bitcoin mining company. And then there was Coinbase. So got to know Balaji, got along really well. And now it's a little bit more widely known, but 21 during that time was really in a difficult situation. And 21 was, had about 80 million of liabilities all told. About 30 million in cash, not a lot of runway, and no working product. And so, we kind of had a situation to fix. And given the background that I sort of had in finance, corporate finance, just managing companies, that was something that sort of I was able to help out a little bit with. So we spent a lot of time, first of all, turning that around. And I sort of liken, the 21 to earn story a little bit like, what is it? Theseus's ship. So between point A and point B, every single plank in the ship gets swapped out, right? So that's pretty much what happened between 21 and earn. Everything, every line of code, everything was different by the end. And so that was sort of the transformation that we did a little bit behind the scenes. And what I thought was really exciting about kind of earn as we were thinking about different sort of businesses that we could build was, we really thought about, crypto. What is it about cryptocurrency which actually solves a problem, which is actually better than the system we have right now? I don't think it's about decentralization first. That to me is a little bit of this sort of, solution without a problem. But what crypto, especially in 16, 17, and I would even argue now, is much better at is sort of global payments, right? And with crypto, you can pay a lot of people very quickly in arbitrarily small or arbitrarily large amounts. And a lot of the other technology about fully decentralized systems isn't really there and really scalable. That's at least something that adds a lot of value to people. So we started thinking about micropayments and different ways that micropayments could actually sort of appeal to a large number of people. When we thought about sort of where is the market today and how can this technology be applicable, it's not about decentralizing everything, right? It's about helping people monetize sort of latent assets that they have today. And the one that we all have is time. And that's actually really relevant to monetization models that are actually a little bit less efficient today in terms of, monetizing people's attention, trying to distract people and clicking ads. And so that's kind of where we came up with initially this idea of, what if you could pay to reply to emails, which, to be fair, is something people have written about in crypto for years, right? Possibly even, over a decade. Satoshi first wrote about that, I think, in some of the posts that he made on Bitcoin Talk as potential use cases. But then if you thought about sort of replying to an email was really just one way you could sell your time. And so as we sort of thought about it, it became a much richer idea and also highly profitable enterprise.
So I've got an interesting take on earn.com, and I don't know if you've had anyone else say this or you felt it yourself, but when I first discovered it, it was a real wow, this does everything I need LinkedIn to do.
Mm-hmm.
Because my problem with LinkedIn is I don't ever really use it, apart from maybe researching to find someone. I've got all my reviews from people on there, but they mean nothing because no one's going to leave a negative or honest review. So you just get lots of positive reviews for positive reviews. So they don't mean anything.
Yeah.
I don't use the company pages because companies are much more active on Facebook and Twitter. So in the end, for me, it is just a way to contact people. And I've used it for the podcast a couple of times to contact people.
Mm-hmm.
When I used to have my agency, if we were doing a creative pitch, it would cost you anything up to 15 to 20,000 to do a great pitch for a client. If you're invited to a 3-way, 5-way pitch, it's expensive, but we would always spend that money because once you've got a client, it's great. So the only thing I found with earn.com, I thought it needed to be almost much more expensive.
Mm-hmm.
Like there were people on there, I'd be like, I would happily pay you £500
Yes.
for just the chance to tell you something, because you give me 10 of them, I'm definitely going to convert one into a new client. If I can get them on the phone, I'm definitely going to turn them into another client. My first few experiences, though, with it, I didn't get responses. So I was kind of like, and maybe, it was the wrong people, but I think I was paying $10 to speak to somebody and it wasn't enough. Is that interesting feedback? Have you heard that before?
Yeah. And, initially when we started in the beginning of 2017, we kind of started with a market that we know very well ourselves, which is kind of Silicon Valley VC world, which, in some circles is, very highly prized kind of audience to try to get in touch with. Right. And it was being used exactly for that. And I think that, and we looked at, scaling that across kind of that level of access across different industries. And we thought about that, and that was something that we wanted to do over time because for example, Hollywood celebrities would love something like that, right? We had actually had a number of folks from that community reach out to us and say, "Gosh, it would be fantastic as a way of filtering, for example, A&R department requests, right?" And so I think that definitely is something that you could build a business around for sure. It is really just, a matter of time prioritization.
It's kind of a proof of work system.
How do you mean?
Well, so when Adam Back designed Hashcash, he designed as a proof of work system for spam to get rid of spam emails, right? There would be a cost to do it. So in some ways, this is like a proof of work system in that you're having to pay to filter out the rubbish.
Yes, exactly. Yeah. Exactly. So many different gatekeepers. There's an entire business of being a gatekeeper, right? That's like the role of an A&R department.
Yeah.
And this would be one way of basically sort of self-regulating. So, the other thing that we kind of realized through this is micro work. Oftentimes people equate with low skilled labor. It doesn't have to be. And that was one of the things we realized and were, basically able to make a business out of with Earn that, the $100 VC reply, for example, which is what we did a lot of, is also micro work. But micro work can be high skilled work.
Yeah. I guess people don't think of that. So how long have you been in the Valley now?
I moved back here in 2015.
Right. What is it like there at the moment? Like, is it still the most innovative place for tech? Is it the best place to raise funds? Or is there a lot of competition now elsewhere?
Well, I think that's a leading question, Peter, because I think you know what I think about that one, which is that, look, it's a little bit of both. On one hand, there's still a reason why people choose to be here and choose to come here. And despite however much they complain about it, still find it hard to leave because you still have a greater density of sort of future-oriented talent here and coming here than probably really anywhere else. And you also have this kind of intangible culture, which is really what I think kind of drives it all and kind of glues it all together, which is it's like a positive sum game oriented culture, right? And I think that's really unique for the Bay Area versus, for example, when I lived in China. I mean, in China, it's kind of like you start at zero and it's a cold, hard climb up from zero, right? And I think that fundamentally, that kind of, grandfather trust level with a stranger is something that sort of facilitates and kind of lowers the friction of relationship building, of kind of working together, of growing something, because it's all about future orientation. And I think that that's something which is still really special. And that fundamentally is the intangible that kind of keeps this ecosystem tied together. And that's something which is just fundamentally hard to replicate because it's about culture, right? And it's about kind of trust levels. So that is something I find really special and something that kind of keeps me from, leaving. But then on the other hand, I think that the the kind of perspective among this community is, suffers from a degree of confirmation bias, suffers from a degree of, we were successful in the past and we owned all of the tech trends in the past. And so past predicts future, and has a little bit of a whiff of kind of the innovator's dilemma as well, right? And I think that is something which can become a limiting perspective. And I think that absolutely is reflected in blockchain as well. One thing I think about quite a bit is there's kind of this assumption that because, with whether it was the sharing economy, or if you go before that social media, or you go before that kind of search in the beginnings of the internet, each one of those tech trends was so fully owned by Silicon Valley, right? And the biggest winners in that space were kind of homegrown and, from lowest level of technology to kind of, the go-to-market and all that kind of stuff was really sort of owned by the Bay Area. And there's a little bit of that assumption that if blockchain is the next thing, then transitively, Silicon Valley is going to own that as well. And that's something which I think breaks down a little bit in the blockchain world, because, it's something which is, for many of the reasons that are, obvious to those of us who've been in the space for a while. But, anyone can participate. In fact, the markets and the kind of consumer interest in this is arguably, or even just factually, much higher in Asia than it is here. And so when I sort of compare the sort of very, almost a little bit insular perspective within a very tech-oriented community here versus what the market is more globally, is a little bit mismatched.
Next up, I talked to Lily more about how Silicon Valley works and what they don't understand about crypto and Bitcoin. But before that, I've got a message from my show sponsors. So let's talk about Kraken. And I think this week just proves why they are such an important exchange and why I wanted to align myself with them. Just look at the week Coinbase has had. I mean, their overall attitude towards the space and Bitcoin just doesn't sit comfortably with me. I don't like this technology they recommend for storing your keys in the cloud. Nope, not for me. The purchase of Neutrino, nope, not for me. They've got like this stupid long history of appearing to do everything which Bitcoin does not stand for. It's just not for me. Nope, sorry, nope, Coinbase. There's a reason I approached Kraken. There was a reason I wanted to work with them. So listen, I'm in the process of ending my relationship with Coinbase. I'm going to be closing down my account. I'm setting up with Kraken. I'll share my whole experience of that with you. But why do I love Kraken? It's not just because they're a sponsor. I was the one who approached them, but I do want to work with an exchange that does have significant size. I want to be able to trust their operations. I want to be able to trust their security procedures. Kraken have got that. They've got the scale. They're doubling down on everything. They're doubling down on their investments. They're building out an amazing team, which is why they're the best exchange in the world. And most importantly, they are a proper Bitcoin company. Yes, I know they allow the trade for other digital currencies. I think it's hard for an exchange to get away from that, but Jesse has always had Bitcoin at his core. It's always been at the core of Kraken. I love them. I'm a Kraken fan, so join me in supporting them. Head over to kraken.com, which is kraken.com, and let's support an exchange with some proper values. Also, BlockFi. I'm heading out to New York to spend some time with these guys next week. They've got an exciting new announcement, which I'm going to go and find out all about, so I can share that with you next week. I mean, I know a bit about it anyway. It's really cool. But I'm going to be going to meet up with Zach and the team, just find out the details, find out what this new product is, who it's for, what are the benefits, and I'll be sharing that with you next week. But if you are interested in a crypto-backed loan, well, BlockFi are the best, right? I keep going on about it. Of course they're the best. They are the leading crypto to USD lender servicing customers worldwide. They cover 47 US states, and their interest rates start as low as 4.5%. BlockFi accepts Bitcoin, Ether, or Litecoin as collateral. You can be funded in USD or GUSD, which is Gemini's dollar-backed stablecoin. And if you make an application, you can get your funding in as quickly as 30 minutes. That's pretty cool, right? So head over to blockfi.com/whatbitcoin did, and you can get $25 in free crypto added to customer collateral loans under $10,000, or $50 in free crypto added to customer collateral loans over $10,000, and your application will only take a couple of minutes. So head over to blockfi.com/whatbitcoin did. That's blockfi.com/whatbitcoin did. What I'm not sure about with Silicon Valley, I'm trying to understand, it's not my background. I live in Bedford in England, which is a tiny little town, so I don't have the experience. It seems to me that the Silicon Valley culture is one of innovation, which is great, a lot of money there, but doesn't seem to understand Bitcoin. And it seems like Bitcoin is a problem for Silicon Valley.
Yeah, it's interesting because, those of us who've been in this for a while laugh when Wall Street says blockchain, not Bitcoin. But in a way, Silicon Valley says the same exact thing, just in slightly different language. Over the last 5 years, I feel like I've done this full tour of different ideologies within the blockchain world. And there's so much irony in it for me. I think that, when I think about Bitcoin and blockchain and this whole, let's just look at the term programmable money, right? If you break that down, programmable money, the noun is money, and the modifier is programmable, right? So first and foremost, this is about incentives. This is about markets. This is about globally accessible, censorship-resistant money, however you want to put it. And secondarily, it's an important feature, but secondarily, it's about sort of the programmability of that money, which makes it more accessible. But then what I feel like has happened over the last few years is people have really focused in on this whole smart contract kind of distributed computing platform, which was, of course, initially sort of spawned by Ethereum, and now the 30 some odd smart contract platforms, which are essentially sort of competing within that kind of vertical or sort of singular use case within this kind of broader classification, if you even buy that at all, of blockchain. And I think that's driven by a couple of things. One is that people here are technologists, and so they're going to favor the technology side of things. But then when you mix that up with the fact that this is fundamentally a live market, right, in a way that Uber stock is not, in a way that Facebook pre-IPO is not, then I think some really funny things start to happen. What also is kind of influencing this narrative is that people here, as a venture investor, you make money. If you make money, you make money because you invested, relatively early. A lot of value is created, and then you made money, right? And that's the only way that venture investors make money. And then at some point in the future, you have a relatively controlled liquidity event, which is either, an exit to a strategic, a sale of the company, or you go public, and that's a very sort of well-worn process. And so therefore, it's like a pretty, clear path, exactly, between your investment and then if and how you make money in the future. With crypto, it's a totally different thing because you get liquidity at the seed stage. And so now it's basically whether you like it or not, you kind of have to think like a trader. But a lot of people here don't think like a trader because they think they've even been trained to say, I'm not a trader, I'm an investor. And so therefore, I don't want to talk about price. And I've been at so many of these, different dinners and so on and so forth, and people say, I just don't want to talk about price. But that to me misses the point a little bit because fundamentally, this is about money. This is about markets. This is about incentives. And if you ignore price, then you ignore incentives and you ignore sort of what makes, what is sort of the fundamental logic of this whole thing. I'm not sure it's going to end up in a good place.
Yeah, it feels a little bit like too much liquidity is a bad thing.
Well, I think it depends on kind of what you're trying to get out of it, right? If you're investing in this as a value investor, then I think that's also somewhat problematic because most of the stuff that people are so-called value investing in have no clear pathway to creating, much less capturing any value. I feel like I've tried to really get a good answer from a lot of the folks who are deep in this as to how are these protocols going to capture value. And frankly, I haven't found a very convincing one, right? And if you really sit down and think about it, okay, so long-term equilibrium, right? Once blockchain, if and when blockchain sort of evolves from just being the province of, the deeply religious blockchainers, and tries to appeal to, secular folks who need to see value in this, then, okay, so where's the value in something like a smart contract platform? It's got to be anchored in the fundamental resource being accessed, right? And that fundamental resource is some form of computing resource. It's either computing power. It's either that or memory or storage or something like that, right? And there's a lot of platforms which are aiming to provide that access faster, cheaper, more scalable, higher TPS, whatever it might be. But if you look at that kind of fundamental resource, there's actually a benchmark for that kind of, that microcomputing resource. It's AWS, for example, and there's many, many benchmarks for that. And it's not a very high number, right? So let's say this entire ecosystem succeeds. And let's say that now, you're bringing online all of this latent computing resource from, those GPUs, which are sitting idle in a data center somewhere because they don't have a live client for them. And now they can basically mine in the background, for example, all the way between that, which is maybe a little bit more likely, but then, at the extreme, my old computer, which is sitting in my garage and I have no use for it and I'm too lazy to sell it, right? So if you bring all of that computing resource online, then you still have to think about markets because the demand for that computing resource is not going to increase, I don't think, at quite the same rate as you can bring on the basically dust off or sort of 24/7 monetize this latent computing resource. And so if this stuff is successful, then actually the fundamental value, which is supposedly driving that token value, is actually going to drop far faster than it's going to rise just because of supply and demand. And so, and then on top of that, there's the whole issue of, essentially this token is, it's a utility. It gives you access to something. But if you can basically buy it spot, then why would you hold it and store it? There's no real reason to, right? You can basically, with many of the tools which are being built, you can basically just immediately, exchange your store of value into, whatever token you need to buy. And then that's what you're going to do instead. So when you look at it from a couple of these different angles, it's just hard to really understand how stuff is going to, let's just say, create value, first of all. And it's particularly difficult to see how it's going to capture value.
Yeah, I mean, we've had distributed computer systems before we had blockchains. And it feels like with the blockchain and tokens, we've added this incredible extra layer of complexity and friction just for a way of almost like innovating with a technology that seemed innovative, right? Mm-hmm. But it's almost like being this big red herring. I've actually got it written down here, the big red herring. It's this big red herring that now so many people have doubled down on. It's almost like no one can come back and go, do you know what? Like, I mean, I can think of a couple of specific venture funds who've invested quite heavily in so many different protocols and decentralized applications. And I'm not going to name them, but I'm looking at them thinking, I just can't see how any of this is going to work. But there's no way they're going to turn around and go, you know what? We got it all wrong.
It's difficult. I think that in this sense, blockchain might be a little bit like a clean tech trend, right? Remember when there was, it was like $2 billion or something like that went into clean tech from Silicon Valley. And I mean, there's no doubt that the super macro narrative around clean tech is one which is very compelling, right? There's a lot of, latent renewable energy out there that should and can be marshaled. And, solar, thin film solar was like a big trend for a while. But that doesn't mean that it's going to be valuable as a business and also valuable for investors, right? So, sometimes I think about, for example, the airline industry. There's no question that having sort of this very robust commercial air network is great for society, right? Imagine the productivity that enables, whether it's leisure, so the pleasure you get for leisure travel, the productivity you get through business travel. And yet, if you look at the airline industry and their ability to capture value, it's really, really difficult, right? And then, what's going on right now with PG&E as well, there's no question that they provide a very, very valuable resource in the power infrastructure they provide. And yet, they're going bankrupt.
How much difference is there between the VCs, or is it a case of just they all have invested in pretty much? Because when I see a deal, like it's always the same companies. Like I see the same names again and again. And sometimes I'm looking and thinking, is it just a case of like these people have got so much money, they put a bid in everything, and the multiples are so big, they're almost certainly going to make a return? Or is there a huge amount of skill? Because I've seen some investments which are obviously poor from some very well-respected Silicon Valley VCs. And also, I put out a really provocative tweet when I was there, just for fun, and somebody phoned me and said, you need to be very careful. But I was like, why is it you can't talk shit about A16Z? Like, is that a big deal? Like, am I going to go in some black book if I criticize them?
Well, I mean, every community has its conventions, right? And I think that one of the kind of products of this kind of very future-oriented economy that we live in here in Silicon Valley is that and I actually think this generally is a good thing, which is that people are playing for the home run, right? And people are not playing for, like onesies or twosies. And so therefore, because that kind of future orients everyone, and that means that people are willing to sort of forego today in order to have another swing at the home run. All things considered, I actually think that's a good thing because it makes people sort of more cooperative and reinforces this whole idea of the positive sum game because, who cares about what's happening today when there's potentially much bigger fish in the future. And I think that drives a lot of things. And it certainly has its imperfections, which are interesting to contemplate and fun to criticize sometimes. But at the same time, I think it's kind of a byproduct of actually a good thing.
So it feels like Ethereum was the potential home run then.
It depends on what time frame, right?
Well, yeah, but Ethereum became like the Silicon Valley crypto thing.
Yeah.
So many VCs got behind it or invested in things built on top of it. And there was a huge hype cycle. Who knows who got out? I suspect most people didn't get out. And now there's just kind of like this, we're in this kind of weird state where like there are people doubling down on Ethereum. There are people who are just like, I don't know what to do. I've got these illiquid tokens I can't get rid of. And then there's people starting to say, yeah, I might have got this wrong. But it feels like Ethereum was something driven by Silicon Valley.
Well, yes and no. I actually think it was the FOMO, the FOMO and regret of having missed out on, it's like ROMO, right? Regret of missing out on Ethereum that actually drove kind of 2017. Because, Ethereum was starting to peek up from the corners of the internet back in 2014. I remember at BTCC, people were sort of talking about this really innovative new technology called Ethereum. And then when they went out and did their crowd sale for, the 16 million some odd, actually a lot of people in Silicon Valley turned them down, almost everyone, right? And then they went from, 16 million to 50 plus billion or whatever it was at some point in 2017. And it was that rise, before the subsequent fall, which made a lot of people think, gosh, that would have been the best investment of all time. Because I would have been liquid the entire time. And basically in 3 short years, I would have made however many thousands of percent, right, of a return. And so what's the next Ethereum? So then, this is one of those things where the logic is sound, but then it kind of gets you into this place where you don't want to be, right? Because then the logic is, okay, well, let me invest in the next Ethereum because if I invest in 30 of them and one of them does what Ethereum did, then I'm done. And I return my entire fund and then some, and life is great. And then, so I think that's what happened. So then people start to, in actually a fairly rational way, say, I should invest a little bit of money in 30 of these because if one of them goes from 16 million to even $1 billion, that can happen in 1 or 2 years, and I'm done. And then what happens is, these are, because they're tokens, there's no governance. And so they all become club deals. So a lot of people can start to get in them. And then it becomes very quickly becomes a speculative game. And then what people are kind of missing a little bit in the middle is, okay, well, Ethereum went from 16 million to however many billions, not because of fundamental value creation, but because of speculation, because it was basically just trading that one day in between. So then what I feel like people are confusing a little bit, going back to what we were saying earlier, is that they're confusing sort of returns, near-term returns with value creation. And I think that sort of that inversion is something that also helped sort of fuel this boom. And then we got into a place that we didn't really want to be in.
So the home run was the year. It was 2017, not any real particular technology, because you could pretty much invest in anything, right? It was going to go up.
You can invest in anything, but Ethereum, if you sort of timed it even so, would have been in that 12 months would have done extremely well for you, right?
Of course.
But then people were confusing that short-term run, that 12-month run, with actual value creation and a longer-term investment thesis, when in reality, very little sort of long-term value is being created here.
Yeah, and there's this like weird expectation of when is the next bull run? When's it going to happen? And I don't know. I mean, maybe it will. I don't think it will. I think too many people have got burned and too many have realized there is no value here. Like, this is all things that don't have intrinsic value.
That's right. I mean, I think that that's where Bitcoin to me is different from the rest.
Mm-hmm.
I'm still fairly optimistic on crypto, truly long term, right? Because I do think that there are broader kind of social trends going on here that favor that favor cryptocurrency and adoption of numerous blockchain based solutions. And so long term, I am bullish on that. But then the question is, of those various use cases that might actually see adoption someday, how many of those are just going to give value back to users? And how many of those are actually going to accrue value as an investor, right? And so if you think about this from an investment standpoint, rather than just sort of what's good for society, which I'm perfectly happy as a user, right? Then I think you sort of have to go through this whole sort of logic tree. And I've tried to think about it various ways, and I pretty much end up on Bitcoin as being the most valuable thing in the ecosystem long term. Now, it's not without its risks, but that's why I suggested that we title this episode the Bitcoin Rationalist.
Yeah, I love. Do you know what? That's really stuck with me because as I've kind of learned more, I've become more of a Bitcoiner, and I've not wanted to say I'm a Bitcoin maximalist because I'm kind of interested in other things and experiencing other things. So I used to call myself a Bitcoin maximalist sympathizer because I kind of sympathize with everything they're saying, but I'm just not there myself. And then when you said to me, well, I'm more like a Bitcoin rationalist, I'm like, yeah, I get it. So is that your invention? Are you claiming the copyright?
Well, I haven't heard anyone say it before, but I think it resonates with a number of people. Because if you think about it, that is honestly the inspiration, and also it's a term where you preempt any agreement. Because what is someone going to say? No, I disagree. I'm irrational.
Well, yeah, but I put out a tweet which triggered a bunch of people the other week, and I put out Bitcoin maximalism is common sense. And it did trigger people. Okay, so listen, for you, why is Bitcoin different then?
I think that instead of thinking about blockchain as the category, I think about blockchain as a technology. And then there are different use cases for that technology, right? So let's think about this from the perspective of use cases rather than a distributed ledger technology. And if you think about different use cases, well, then, there's the store value concept. There's distributed computing. And those are the two major categories that people are sort of talking about right now. And then in the future, as the infrastructure matures, and there's going to be an increasing number of applications built upon that DLT, right? And so I would even say that something like the exchanges, for example, and the various kind of brokerage services, I would consider that to right now be sort of an application built upon this. And there's certainly value which is being provided and also captured through those platforms, certainly. But then if you think about sort of the protocol level, this concept of the store of value is one that we're very familiar with, right? This kind of need for a non-sovereign kind of monetary store of value is something that's been around as long as civilization has been around. It's taken the form of gold. And so I think there's a very simple rationale for it, right? And when people talk about a better Bitcoin, Bitcoin still has risk in it. So it's possible that something else is going to sort of take that seat. But a lot of the conversation from a technical standpoint of why this is better than Bitcoin, to me, is all about the technology and misses the market side of it, right? It's a little bit like someone saying, hey, I found this new metal, which is more useful than gold because it's easier for me to melt it down because it has a lower melting point. It's a little bit softer, so I can more easily shave some of it off in order to pay for my coffee. And it's a little bit lighter, so I can stuff more of it in my backpack, right? Or it's a little bit, has different conductive properties, so it's a little bit better for industrial use. If someone said that, we would all just laugh, right? Because you're saying, well, that misses the whole point of gold, right? It's not about any of those things. It's helpful that gold can be transferred because it needs to have some sort of transferability sort of properties to it in order to retain, its value. But that's fundamentally not what it's about. And that's the kind of challenge that I have with a lot of these sort of better Bitcoin narratives. It's too focused on these individual kind of features and misses the whole use case. Now, that said, I do think that there are potentially some, long-term risks to something like Bitcoin. I think the most prominent one in my mind is the fact that, as time goes on, as adoption increases, more stuff happens in the ecosystem because the full history of Bitcoin transactions is basically there, and then you marry that with the sort of decreasing anonymity, the ability to sort of de-anonymize the Bitcoin blockchain. If that happens, if that continues to happen at some point in the future, we get to a point where Bitcoin is basically non-fungible tokens, right? And if that's the case, then that potentially makes it, not so great as a store of value, right? Because then it really matters whether this coin came from, maybe was freshly minted coin versus maybe has some other stuff in its background. And that's something which I think, whether it's a 3, 5, but kind of on that time frame is something that we might have to think about.
I heard a good argument from Dan Held on that. Do you know Dan?
Mm-hmm. I do.
Dan said to me, the thing about tainted coins is there's no market for them. If there was a second market for tainted coins and they were cheaper, he said I'd buy them all. Because he knows he can move them 2 or 3 times and he'll be fine.
Mm-hmm.
So I don't worry about that so much. And also, we get a certain amount of fungibility with Lightning. There's other things like CoinJoin that's being worked on. I know it's a big thing within the developers.
Yep. Like Sabi Wallet, there's different ways on the client side in order to manage that. So, I think there's a number of different ways that can be managed, which is why I'm also not terribly concerned about it right now. But then, who knows what might happen in 3 to 5 years, right?
Yeah, true. I've got a bigger worry, and it's something you brought up as well. My bigger worry is, I've got 2 actually. Firstly, I find it's hard to be overly critical of Bitcoin. I think people are very defensive at sometimes. There's a couple of times where I've wanted to be critical of things, and I've only because I want it to improve, and I've been worried about there's too much like patting on the back. Oh, we've done such an amazing job. You can't say that. So there's that. Secondly, I think I'm over the excuses for poor UX now and poor education. I think people need to get a little bit in the real world. Is that the only way you're going to bring people on is with, most of the time, is with price speculation. Maybe there's the odd edge case for like using crypto for transactions, but for mass adoption, I think there needs to be kind of a bit of a rethink. I had a play with the Blue wallet, and the UX from getting Bitcoin into your Bitcoin wallet and your SegWit wallet, then put it into the Lightning wallet, and then realizing you can use it. Sorry, like you have to really care for that. And there are a few things that wouldn't have been that hard to do, but there's no focus on UX, and I kind of think that bit's missing. How do you feel about that?
I have a pretty strong opinion about this. I think that, I've been in so many different forums where people talk about mass adoption, and I'm thinking, mass adoption of what, right? Half the folks here will even say, I don't care about the application layer because I'm just focused on the protocol, which is like just crazy talk to me. And then, the next second they'll talk about mass adoption. Mass adoption of what? How is this useful? What is the value that you're providing to people and why, right? So when I kind of step back and think about, what is compelling about blockchain to a lot of people, speculation is fundamentally about making money, right? And so I think that what really appeals about all of this, coming back to the money point, is the ability to generate income, right? And in the way the kind of market kind of works right now and the industry works right now, mostly that's in the form of speculation. But then what we are kind of experimenting with at Earn, and I saw kind of the power of, is the ability to earn money. And I think that what also resonates with a number of people when you start talking about sort of computing resource is, kind of a little bit implicit in there is, hey, I can monetize resources that are otherwise just sitting there fallow. So I think that if you're thinking about mass adoption, then it's got to be about something which is better than free. It's got to be about making money. That's speculation today, but in the future, it can be something which has a different risk profile. And I think that's really the way I think about value proposition, use cases, why people beyond, the 50 million or whoever have touched Bitcoin today should actually care, right? And why they should care has nothing to do with, ZK snarks in this implementation or that one. And in a very direct sense, right? There's got to be like a very, very simple reason why people should, go through that learning curve, and it's because it pays. So that's one. And then as I think about, there's another narrative that people like to talk about a lot, which is, that's got to be about monetizing digitally native assets, right? Which to me is a little bit maybe too convoluted of a way of putting it. That also it's like an intellectual concept that doesn't really scale. But then, the way I think about that is there are, people typically think digitally native assets are things like, in-game items, right? Are things like, buying digitally native tokens, right? Which to me is one step better than PDFing the newspaper, right? But it's a little bit like taking the New York Times and putting it online HTML format, right? Okay, that's an improvement, but that's not fully harnessing sort of the potential of this, because it's not imagining interactive news. It's not imagining social media. It's still a little bit too literal. And so right now people are talking about NFTs, right? And in-game items and digital trophies and esports and the potential for blockchain to sort of add value to all of that. And I think there might be something there in the same way that nytimes.com or wasj.com is, proper business and everything. But what I think is more interesting is things like, digitally native resources that already exist that everyone has, right? Time is one of them. And that's what we were kind of exploring at Earn. Another one I've been thinking about recently is risk, right? And potentially the ability to do some form of peer-to-peer microinsurance. And so that's an angle of DeFi that I've been starting to think about a little bit more, because, thus far when people think about DeFi, it's a lot about options, derivatives, gambling, prediction markets. But the way that actually scales and adds value to a large number of people is not in the form of speculation, because most people, and I'm talking about hundreds of millions of people, don't really engage in that.
So why it feels to me that there's very little investment then from the Valley in Bitcoin, and I might be missing it, but the only ones who seem to be very focused on it is it Blockchain Capital, Spencer and Bart. Mm-hmm. Yeah, I mean they seem to do a great job, and their track record's pretty hot, right? But there seems to be very little investment in Bitcoin, yet it seems to me like it's like a missed opportunity. Why do you think it is?
I'm actually not so sure about that. I think a lot of people are invested in Bitcoin, but then there's just not much to say, right? It's because anyone can buy it. There's enough infrastructure that it's pretty easy to hold it, and then you just get along with life. There's nothing really to say.
No, I mean more like the fund. Why aren't the funds investing in like Bitcoin startups as much? Like there's so many, I don't know, it seems like a lot of the Bitcoin startups I speak to really struggle to raise money. Yet Bitcoin's the most likely blockchain to exist in another 10 years, maybe.
That's right.
So there's a lot of value that could be captured there.
I think it goes back to the narrative from 2017, which is still kind of playing out, right? A lot of that narrative was around the FAT protocol, distributed computing platforms, and more about the tech side of things rather than the money side of things. I wonder whether that's going to be rationalized in the next year. I hope so. You
think it's going to be that quick?
I think so. Maybe in the next year or two. But what I think also played into that was, the whole scaling debate that happened in, starting in 2015. I remember it was August of 2015 when a bunch of the Chinese miners all went out to dinner together in Beijing and said, yeah, maybe we should increase the block size to 8 megabytes. Wow. I remember that at the time it wasn't really considered that big of a deal. Before there were the scaling workshops in Hong Kong, and then there was the beginning of the strategy roundtable, and there's this another scaling workshop in Milan, and became this big thing, and it became not sort of the greatest unifier of communities for about 2 years before it actually forked the community, and it was just a lot of bad blood on both sides. And so I think that what happened through that was Bitcoin didn't look so great during that time, right? Because the community looked pretty poisonous and kind of felt like that a little bit too. Mm-hmm. And in the meantime, there was Ethereum, which had this totally sort of new concept, seemed to have, a pretty charismatic leadership team, and that resonated with a lot more people. So that's kind of where a lot of people went during the meantime, because it also kind of fit a lot of the kind of narrative that you typically see with successful potential for success in a venture environment, which is you have a lot of developers working on it. You sort of have this massing of the community. There's, potentially a wider variety of applications you can build on Ethereum. And plus it went, from 16 million to 50 billion in X time frame, right? So, I mean, that's a whole lot of check marks. And so I think that narrative sort of was like this big magnet for people in one direction. And, again, it's something which is near term, very, very rational. But then I think it takes a little bit of time for people to sort of correct from that again.
One of the things I look at and that worries me is that Bitcoin keeps the market alive, right? Say Bitcoin went back up to, say, 10K. That's going to inject a lot more money into the market. Traders are going to start investing in the altcoins and the tokens again. And that's going to give like a lifeline to some of these projects, which kind of makes me therefore want the bear market to really stretch out. Like I'm now at the point where I don't care if there's another year. Like let's flush out the market. Let's get rid of all the nonsense and see what survives at the end. And I don't think there'll be much, but how do you feel about that?
I agree. I think it's going to be at least a year of the bear market. And then, folks who maybe held a little bit too much tokens in their treasury are going to be hurting. So that's already happening, right? That's already happening big time to a number of people who just couldn't, or wouldn't, or for whatever reason didn't convert to fiat. So I think that's going to put pressure and be a continuing sort of Darwinian process for the industry, which I think is a good thing, because I don't think we actually need, for example, coffins on the blockchain.
I don't. What's a blockchain for? Because there's that great Gregory Maxwell quote that what is it? We're creating verification, not computation. Like in computation on the blockchain is just not a great idea. And like that's one of those things I have to sit down for a while and have a think about. And then I was kind of like, yeah, no, I understand that, right? Mm-hmm. That's why there are scaling issues, because it is complicated what's being built. But if you try and go to the level of adding computation to it, like world computer and putting everything on the blockchain, it just gets kind of out of hand. So like what should be on a blockchain? What should a blockchain be used for?
Well, I think, it comes down to this, very specific type of security that you get, which allows you to be censorship resistant, right? And so I think that that is very important for those types of use cases that actually require censorship resistance, which is essentially the world goes to shit, and I need to have some security against that, right?
Like an insurance.
It's a little bit of insurance, but the same reason why, people around the world hold on to gold, right? Or the same reason why, 100, 200 years ago, if you got engaged, then you basically gave a diamond ring to your fiance as basically collateral for sort of entering into that relationship.
Is that like a historical fact? Is that where it comes from?
Well, I mean, it's basically the Western form of a dowry, right?
I never even crossed my mind. Never thought about it.
My understanding is that, because way back when, and in many parts of the world, it's still like this, as a female, sort of your resource is your reproductive capability and the honor related to that, right? And as potential sort of, compensation for things maybe not going right, you basically got this, big diamond ring or something like that. And then obviously that took on a different dimension, but I believe the origins of that were pragmatic in nature.
Wow, I didn't know that. Okay, so like if I ask you if you had to hang your hat on it 5 years from now, I mean, if Bitcoin's not around, then nothing is. But yeah, I'm going to make an assumption Bitcoin's still here in 5 years. Do you think there's anything now? Is there anything now that you look at and you think, yeah, I still think that'll be here in 5 years? That's a worthy project. That's a worthy area of investment.
Mm-hmm. I think Ethereum is still going to be around. Absolutely. And I think a lot of the stuff is still going to be around. I think that, most of the stuff in, let's say, the top 10 or 20 is going to be around. The question is, what is the total coin market cap size going to be? And then what's the Bitcoin dominance in that going to be, right? And then, for anything which is not Bitcoin, what's the distribution going to be as well? And, when I think about this from an investment standpoint, it also matters what type of investor you are. If you're an investor where you've already sort of a priori committed yourself to only investing in crypto, then you have a different lens, right? Because your kind of opportunity cost is other stuff in crypto, and what is the least bad stuff that I can deploy my X amount of capital in. So then, if you're a dedicated crypto investor, then the calculation you basically have is, all right, I've got a fund, which is, let's just say $100 million, and I've got it deployed over 3 years. And so it's roughly sort of 30 million a year. And there's only so much I can put into Bitcoin. So then the rest I kind of spread evenly over 3 years, and I look for the least bad thing out there. And I think that's driving a lot of the investment, because what happened was 2017, a lot of sort of money kind of came flowing into this ecosystem to sort of get some allocation to crypto, and as some small percentage of the larger sort of, venture capital kind of commitments. That's actually still a relatively large number. And so now all of that capital is committed and being called and being put into stuff, which is some of it's, decent, but it's effectively sort of the least bad stuff out there. And so that's what I see happening with a lot of the kind of, dedicated crypto investment. But then if you sort of broaden the scope to, well, you could invest your money in anything, right? You can invest your money and your time into anything. Then once you put crypto in kind of that context, then I think it's much harder to rationalize, substantial allocation to something other than Bitcoin in these times, right? Particularly at these prices as well, because Bitcoin at, what is it, 3,400 with, some material downside potential, right? Compared to everything else, it just seems like a pretty good bet.
Yeah. Interesting. Yeah.
I mean, with the entire time, not a security, right? There's only kind of 1.5 things in this entire ecosystem which are definitively not a security in the eyes of the SEC, and Bitcoin is one. And sort of, I don't know if they've come out and directly said that about Ethereum, but it's kind of understood that Ethereum is not.
Well, so that's not 100% confirmed, right? So there was guidance given. I think it was to do with like a level of decentralization, which is why the Ripple coin narrative has changed to say we're massively decentralized when everyone knows they're not. But it wasn't confirmed. Yeah, it wasn't entirely confirmed.
It's not explicitly confirmed. My understanding is that it's kind of implicitly understood that ETH itself is unlikely to be a security.
Yeah.
That's why I kind of call it like 1.5 things. And, given that, I think that Bitcoin is just so far ahead in terms of potential for adoption, because that like very, very large barrier to entry from so many other coins it's non-existent for Bitcoin.
So yes, we've done our hour. I don't want to go on after you said that pretty much Bitcoin is the only bet to make. I think that makes her a great.
No. I mean, I don't want to be so sort of cut and dry about it, because I think there are other interesting opportunities in this ecosystem, right? So I think that the kind of 80-20 version is Bitcoin, because anyone can get it. It's pretty easy to get. It's not a security. It's going to be volatile, but it's the thing out there which is most likely going to be around, right? Now, if you have the desire, appetite, find it fun, whatever, to invest beyond that, then I actually think there are a number of things that could be interesting. And I think that, the application layer broadly defined is something that matters in this ecosystem, because I think that, the infrastructure here in and of itself needs to be extended. And then on top of that, the infrastructure for crypto is so unique that there need to be sort of entirely new crypto native companies built in order to provide those services, right? And so I think there's absolutely going to be, a space for that. And those can be really good companies. And those are going to have to be built. And then what I also think could be interesting is it could be interesting to have there's a lot of distressed assets out there, right? With pretty decent teams that just maybe didn't manage their treasuries properly. And that could be interesting to do sort of an M&A type of play. And I think there's opportunities for certain things like that, right? But that kind of hews more to just traditional businesses. There's nothing wrong with that. And so that's also an area which I think is, interesting to think about and, as a business opportunity in this space.
Yeah, I'm not going to go 80-20. I'm going to stick 100 right now for me. For me, it's just the only one I feel comfortable with. And it's not that other interesting things can't be built. I just don't know if they, like you said before, if they can capture value. So that's what I'm a little bit kind of like, I'm going to stick with Bitcoin for now. Lily, this was great. How do people stay in touch with you?
Well, you can follow me on Twitter. I'm CA Lily Liu, LILYLIU. Not to be confused with Lucy Liu, which happens a lot. And that's probably the best way.
All right, cool. And I'll share that out in the show notes. Thank you for coming on. Take back my apology for the football now, because you obviously would have understood. And next time I'm in the Valley of Liverpool playing, we'll go and watch it together, yeah?
Fantastic.
Okay, so what did you make of that? What did you make of what Lily had to say? Did you enjoy that? It was pretty cool to get her perspective on everything, especially as she's a bit of a Silicon Valley native. She understands how it works. She understands how the funds work. I don't get it at all. I don't get the way they think, but she does. And the way she explained things to me was like really helpful. Talking about the Ethereum home run for some early investors and why most of these venture funds are now investing in other smart contract platforms. They want another home run like Ethereum. Kind of makes sense in hindsight, really, but it wasn't something I'd thought about in the way she articulated it. So massive thanks, Lily. Thanks for coming on the show. Really appreciate your perspective here. And what about Bitcoin rationalism? I love that. I've got to say, I absolutely love that. And interestingly, though, I've got to say, like, I get often accused of being a Bitcoin maximalist, and I'm definitely a sympathizer, but, you know, there's a couple of things that I'm keeping an eye on. It's hard not to watch what's happening with MakerDAO and what's happening with DAI. Something's going on there. It's something of interest. So I'm going to be delving into that soon as well, taking a look at that, seeing if I've misstepped there, got that wrong. Anyway, listen, I hope you enjoyed that interview. As ever, if you've got any questions about it and you want to reach out to me, my email address is hello@whatbitcoindid.com. Feel free to drop me an email. And also, massive thank you to everyone who supports the show. Growth is amazing. I'm just about to do the stats for the end of February, another record month. Super cool. And a record month on revenues, so much good stuff is happening, which enables me to do so much more for the show. But listen, if you do want to support the show, if you enjoy it, if you want to back me, there's a whole bunch of things you can do. Firstly, just listen to the ads. I always say this, just listen to the ads. It's the advertisers like BlockFi, Cash App, and Kraken that helped me to do that. Saw that with Cash App and Kraken, who got me out to Japan to interview Mark Karpalas in person. But also everything BlockFi have done for me over the last few months. Just make sure you listen to them. Maybe even go and check them out. But if you don't want to listen to the ads, you don't have to. You can head over to patreon.com/whatbitcoindid. For $5 a month, you can get the show early. You can get it without ads. I've got 85 now, closing down 100, which is pretty cool. I'll probably have to do something to celebrate 100. Maybe do some kind of like giveaway to patrons, but that's really cool. And look, if you don't want to use Patreon, I know some people don't love them at the moment, you can subscribe by crypto. You can do it with Lightning, or you can do it with Bitcoin. Just reach out to me. I'll give you an address to send to, and I'll add you to the distribution list. You can become a show sponsor. I'll be honest, ads are completely sold out to the middle of March. I've got a few left in March and April, but look, if you are interested, reach out to me. Drop me an email on hello@whatbitcoindid.com. I'm going to be getting close to 150,000 downloads in February, which is insane. So if you want to get your brand out there, give me a shout. We can have a call. We can talk about it. If you want to, you can leave me a review on iTunes or click on the subscribe button. Both help with my ranking. That'd be super cool. You can follow me on social media. I'm on Twitter. I'm on Instagram. I'm on Medium. I'm at whatbitcoindid on everything. My personal Twitter is at Peter McCormack. DMs are always open. Feel free to reach out to me. Just don't send me any nonsense. You can check out my website, which is whatbitcoindid.com. You can subscribe to my newsletter, and you can share this show out with your friends and family. Okay, so I've got some really cool interviews coming up in the next few weeks. Got Andreas, got Eric Voorhees, I've got Amber Balday, I've got Chris Panitsky, I've got loads. March is going to be an amazing month of interviews. And as I mentioned, I'm traveling around the world over the next month. I'm hitting New York, Boston, Denver, LA, Texas, Chicago, and Hong Kong for Token 2049. It's going to be a little bit intense and a bit insane. But listen, if our paths cross, do come and say hello. Come and have a beer or coffee with me. And if you do want to reach out to me, my email address is hello@whatbitcoindid.com. Feel free to drop me an email, and I look forward to hearing from you.